Today we are going to deal with the Indian economy, that too specifically the topic of nation income. So with respect to nation income, we are going to deal a variety of questions that will give us an in-depth insight about nation income, right? So here we go. Yeah. Please do reply if you are able to view my video. Is my audio video clear? One second. Yeah, thank you. I think it's clear. Superb. Let's make a start without any delay. Okay. So coming to Indian economy, in Indian economy, nation income is a very, very important concept. It is completely a concept-oriented topic which needs to have an in-depth understanding of the subject. So in the process of having in-depth understanding, we will try to deal with different questions. Through questions in the reverse engineering mode, let's have a depth over the concept. So here we go. All those who have joined, say hi. Yes. So here we go, Andy. First and foremost, see a very, very important question. Adam Smith published his masterpiece, An Inquiry into Nature and Cause of Wealth of Nations, in the year 1776, 1786, 1756, 1766. So this is a question. So we are talking about a very, very important book called as An Inquiry into Nature and Cause of Wealth of Nations. So this book is very, very important for various reasons. I'll tell you why it is very, very important. Now the question asked is, in which year was this book published? Is it published in 1776, 1786, or it's in 1756 or 1766? So what is the answer for this question? So quickly you can give answer for this question. Okay, in which year was it published? If you look into this, the right answer is nothing but 1776 is the right answer for this question. Okay. Now Adam Smith. What is the significance of Adam Smith? Adam Smith is called as the father of modern capitalism. What is he called as? The father of modern capitalism. Father of modern capitalism. Very, very important thing. Why is he called as the father of modern capitalism? Because of the same book called as the Inquiry into Nature and Cause of Wealth of Nations. Now this book in short is called as a Wealth of Nations. Now what is the importance of this book called as a Wealth of Nations? You know that in the world we have got different types of economies. Out of those different types of economies, one of the important type of economy is nothing but capitalist economy. Capitalist economy. Now Adam Smith has got an important role in the evolution of the modern capitalist economies. How did he play a very, very important role? You should know that in 1776 is the same year in which USA became independent. USA became independent and USA was in the pursuit of adopting a policy with respect to economy is concerned. Now USA was in doubt what kind of economic policy should we go about. Now for them this book called as the Wealth of Nation became a guiding force. It has become a torchlight. It has said that if your ultimate aim is a faster growth of the economy, then do one thing. Make your economy as a capitalist economy. What is the meaning of making it as a capitalist economy? You're trying to give the control over the economic activities to the private people. You're trying to give the control over the economic activities to which people? Private people. So private people are going to get control over the economic activities. All the economic activities will be controlled by the private people. This is also called as the theory of laissez-faire. Theory of laissez-faire. Theory of laissez-faire is nothing but it says market capitalism. Based on the demand and supply, the market should be moving. Now it says that if the demand increases, then supply should increase. If the demand decreases, then supply should decrease. So supply should be in coordination with the demand. Simply supply and demand, both of them should be in equilibrium. So these are the philosophies given by whom? Adam Smith. So it's called as what? Father of modern capitalism. And this book called as the Theory of Nature and Cause of Wealth of Nations was published in a year called as 1776. What is the year? 1776. Is that clear? Yes, Varshini. Hi. Next one, see here. In a mixed economy, all economic decisions are taken by central authority. All economic decisions are taken by private entrepreneurs. Economic decisions are partly taken by a state and partly by the private entrepreneurs. None of the above. Now, your question is asked about mixed economy. Ante mishrama arthika vyavastha ani cheppesi antam. Mixed economy. Now, in a mixed economy, how are the decisions taken? Are the decisions taken by one central authority? Are the decisions taken by completely private entrepreneurs? Are decisions partially taken by the state and partially taken by the private entrepreneurs? Or none of the above? What's the answer for this question? Yes, Varshini, what's the answer? C. Yes, I want other people also. Praveen Rao is also saying 3. C. Very good, very good, very good. Excellent. And the right answer is option C is the right answer. See here, as I said earlier, we have got 3 types of economies. What are 3 types of economies, sir? One is called as the capitalist economy. We have got many types, this is one category. Second one is called as the state economy. And the third one is called as a mixed economy. Capitalist economy, state economy, mixed economy. In a capitalist economy, the economic activities are completely controlled by the private people or private entities. In a state economy, government will have control over the economic activities. But when you come to mixed economy, here the economic activities are controlled both by the private and also government. So the regulation is done both by the private and government. So private people will have control over the activities. Even government also will have control over the economic activities. To some extent, one of the best examples of the capitalist economy can be United States of America. State economy can be North Korea. And the best example of mixed economy is nothing but India. India is one of the best examples of the mixed economy. Now, important question is asked frequently in the examinations. What is that one important question that's frequently asked in the examination? The important question asked in the examination is nothing but which industrial policy resolution is responsible for India's evolution as a mixed economy? Today you are saying that India is a mixed economy. The question asked is which industrial policy is responsible for India's evolution as mixed economy? Very, 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 very important. So you should answer this question and everyone should give answer for this question. Quickly, guys. Yes. Praveen Rao, Varshini, everyone of you. Which industrial policy is responsible for India's evolution as mixed economy? Remember that Industrial Policy Resolution 1948. What is that? Industrial Policy Resolution 1948 is responsible for India's evolution as a mixed economy. Why it is responsible for India's evolution as mixed economy? In Industrial Policy Resolution 1948, we classified the industries into 4 categories. First set of industries are strategic industries, which are completely controlled by the government. Second set of industries are nothing but basic or key industries, which are controlled both by government plus private. The third sector is other important industries, which are controlled by the private. And other one is nothing but controlled by the cooperative societies. Okay, like that we classified the industries into 4 categories, where certain type of industries are strategic, certain type of industries are basic or key industries, certain type of industries are other important industries, certain type of controlled by the cooperative and private. Now if you see that here we have got a completely government control, here we have got government plus private control, here we have got a private control, here we have got cooperative sector. So what kind of economy is that? It is a mixed economy. So why India became mixed economy? What is responsible for India's evolution as mixed economy? Then what is the answer? The answer is Industrial Policy Resolution 1948. Many times questions have come in the examinations on the industrial policies. You have to particularly go through Industrial Policy Resolution 1948. You have to go through Industrial Policy Resolution 1956, Industrial Policy Statement 1977. You also go to very, very important New Economic Policy of 1991. These are the important industrial policies in the history of India or in the economic history of India. On this, definitely questions are coming in the examinations. Clear, guys? So here what is the answer? Option C is the right answer for this question. Clear? Yes. Very good, Jalaja. Good evening, Amma, Varshini, Suresh, Praveen Rao. Okay, very good. Nice, nice, nice. Yes, Suresh. Suresh made a very, very important statement saying that 1946 Industrial Policy Resolution is called as the Economic Constitution of India. It's called as what? Economic Constitution of India. It is also called as Bible of State Capitalism. It's also called as what? Bible of State Capitalism, because more importance is given to public sector. More importance is given to public sector in that, right? Next question, very, very important question. Which of the following are correct with respect to the nation income? So, with respect to nation income, there are three formulas given. I am asking you, which of the given formulas are correct? NNP is equal to GDP plus or minus NFIA minus depreciation. NNP is equal to NDP plus or minus NFIA. NNP is equal to GNP minus depreciation. Both 1 and 2, both 2 and 3, both 1 and 3, all 1 to 3. Quickly answer this question. Very, very important. Yes. Okay. Jalaja is saying with 1, both 1 and 2. Right? What about others? I want every one of you to give an attempt. Whether the answer is right or wrong, it is a secondary. Whether you are attempting it or not, that's important. Okay, trying is very, very important. We are not worried about the result. We are not worried about the outcome. What we are first worried is nothing but whether you are putting efforts or not. That's important. Clear? So, which of the given formulas is right? That's the question. Very, very important question for this one. Yes. Very good. So, it's saying all, we'll see. Okay, fine. See here. When you wanted to answer this kind of questions, you should basically know two things. What is the two things? When you want a net value, you have to remove depreciation from the gross. You have to remove depreciation from the gross. This is the first important thing you should know. Second thing you should know that when you wanted to find out a national value, okay, when you wanted to get a national value, from domestic, for domestic you should do plus or minus NFIA. Okay, if you know these two things, then you are bound to get the answer very, very easily, right? Now see here, first we'll go with the NNP. Okay, NNP, when you say NNP, here N stands for what? Net, N stands for national, net national product. Now when you have gross, you can remove depreciation, you get a net value. So simply I write GNP minus depreciation. I write as what? GNP minus depreciation. So the first statement, third statement is right statement. Now when I have GNP, gross national product is there. You want what? Gross national product. Gross national product can be converted into gross domestic product. How? You can convert as a domestic plus or minus NFIA. So simply I write it as the GDP plus or minus NFIA minus depreciation as it is. Okay, that is the NNP. Clear? So see here, GDP plus or minus NFIA minus depreciation is nothing but NNP. So first statement is also right. First statement is also right. Now you see here we have got GDP, here we have got minus depreciation. So remember that gross value is there, minus depreciation is there. Gross minus depreciation is nothing but net value. So simply I can write it as NDP plus or minus NFIA. Okay, so NDP plus or minus NFIA is nothing but the second equation. So in fact, all the three equations are correct. So all 1, 2, 3 is the right answer for this question. So the basic, what is the underlying principle? The underlying principle is nothing but when you wanted to find a net value, from gross value remove depreciation. When you wanted to find a national value, from domestic value add plus or minus NFIA. If you apply these two principles, you are going to get any equation that you want. Clear? So here all 1, 2, 3 are the right equations here. Clear guys? Yes. Yes. GNP gives more importance to the people, whereas GDP gives more importance to the region. Okay. Next question. Which of the following is not included in the national income? Wages and salaries, rent and interest, transfer payments, profits. Okay. So which is not included in the national income? That's the question. What is not included in the national income is the question. So wages and salaries, rent and interest, transfer payments, profits. Okay. One thing is not accounted in the national income. What is that? That is not accounted in the national income. Very simple question, straightforward question. I want everyone of you to give answer for this question. Yes. People are going with C, transfer payments. Yes. Varshini C. Praveen Rao also goes with 3. Very good, very good, very good. Excellent. The right answer is nothing but transfer payments is the right answer. Now, what is this transfer payments? So, for example, let us say that government is giving some subsidies to farmers. Government is giving some pensions to old people. Now, in this case, there is no production of good or service. Without production of any goods or services, what is happening? Money is being earned. Now, when you get money without producing any goods or services, that cannot be part of the nation income. Now, if we see that wages and salaries are by producing some services and or goods. Rent and interest is also that you are giving a service in the form of service sector. Okay, you are renting a property, you are managing a property, you are getting the rent. You are giving a loan, managing a bank, you are getting interest. So that is also providing a service. Okay, when you come to profits, you run a business. Out of this your effort, you get some profits. That is also producing a goods or service. But when you come to the transfer payments, which is where you are getting money free of cost. You are getting money free of cost. Okay, here you are not putting any efforts, so that cannot be accounted in the national income. Transfer payments cannot be accounted in the national income. Whatever the money that you get in lottery, it cannot be accounted in the national income because that's also free of cost. Whatever the prize money that you are getting when you take part in a show, let's say in Evaru Milo, Kodishwarlu, Big Boss, okay, whatever the money that you are getting, what you are paid for acting in that show, that is your national income, but not what you are getting in the form of prize money, right? So all these are nothing, they're called as the transfer payments. They are not accounted in the national income because no goods or services are produced in that activity. Since no goods and services are produced, you cannot accounting them in the national income. So option C is the right answer for this question. Excellent. Now see here, very important concept. Nation income is calculated using which of the following methods? So here we have got different methods. I'm asking you through which method you can account the national income. Output method, income method, expenditure method, all of the above. What is the answer for this question? Quickly, which of the following? Yes, pure form of national income is NNB factor because that's right, Suresh. Now, which of the following are the methods of estimation of national income? That's the question. Yes. Very good evening. Always be positive. Very good. Excellent. Excellent, Andy. Excellent. The right answer is nothing but all of the above is right answer. See here. Now, when you say output method, don't get confused. Output method is also called as the product method. Output method is also called as the value added method. It is also called as what? Value added method. So, output method anna, product method anna, value added method anna, moodu okate. There is no difference in that. Okay. Now, coming to next one is income method. Next method is expenditure method. Okay. In the first method, what do? You do the calculation of the goods and services produced by the nation in a financial year. Okay. What is the total value of the goods and services produced? Simply, you can say that number of goods produced, number of goods and respective prices or cost. What you get is nothing but output method. When you come to the second one, what is the second one? It is the income method. How do you estimate the nation income using the income method? Remember that. In income method, the people in the country can be classified into three categories. What are three categories? People who are working as employees, one category of people. The second category of people are the people who are operating the property or people who are running some entrepreneurship. The third category of people are self-employed. Self-employed. So you can categorize the people into three categories. In the first category, what you are trying to calculate? The compensation to employees. What do you calculate? Compensation to employees. Okay. When you say compensation to employees, again, is of three types. What are three types? One is that the cash component. Second one is nothing but social security benefits. Third one is in the form of the kind. Okay. Now, when a person is working in any company, if a person is working in any company, at the end of the month, they will get some salary. There is nothing but cash component. What is that called as a cash component? Second one, social security benefits. That person will get life insurance, that person will get health insurance, that person will get gratuity, that person will get PF, Provident Fund contribution, that person will get some contribution towards the pension fund. Now, all these contributions also is the part of the salary. That's called social security benefits. The third one, when the person is working in the company, some now and then you'll get some gifts. Okay, that's in the form of what? Kind. It's in the form of kind. Now you have to sum up these three things, and what you get is nothing but first component, compensation to employees. Okay. Now when you come to property or entrepreneurship, it is nothing but operating surplus. When you are operating that business or property, you are getting some surplus. After all the expenditure, some money is left over. That's called profit. So that is should be added. And coming to the self-employed, it's a mixed income. What is that? Mixed income. It's called as what? Mixed income. Now you add all these things: compensation to employees, operating surplus, mixed income. All these three put together is called as a nation income by income method. What is it called as a nation income by income method? Okay, like this. Everyone in this country can be classified into these three categories. Either they will be working in some other companies, or they will be having their own company. They'll give some sort of employment to others. Otherwise, they'll not work in other company. They'll not give employment to anyone. They will do their own household job. Okay, like this, you can classify the people into three categories. You should sum up all the income earned by these people. That is going to give you what? It is going to give you by income method, right? And the third one is nothing but expenditure method. What is the third one? It is called as the expenditure method. Okay. Yes, it's called as the expenditure method. What is the meaning of expenditure method? Expenditure method is nothing but, you forgot formula, C plus I plus G plus X minus M. Okay, C plus I plus G plus X minus M is the formula. Now when you say C, consumption expenditure, the expenditure made by the people for their survival. I is nothing but investments. Whatever the money that we save in the banks, that money will go to the companies in the form of loans. They'll invest that money in the companies. Third one is G. G is nothing but government expenditure. Whatever the money that we pay in the form of taxes will go to the government. Government will spend that money. That's called as what? G. And X minus M is nothing but net exports. Exports minus imports. Okay. All this put together would give something called as a expenditure method. What method? Expenditure method. So this is how you can calculate the national income by three methods. Remember that output method is used in manufacturing sector and also in agriculture. Income method is used in service sector, and when you come to expenditure method, it's used in infrastructure projects. Okay, you're constructing a dam. How do you calculate the national income there? You have to go for expenditure method. You're laying down the highways, okay, or railways. You have to go through expenditure method. You cannot calculate by income method or product method. Clear? So all the methods are the methods of estimation of the national income. Remember that Dadabhai Nauroji is the first person to estimate national income in the country. Very, 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 very important. Okay, the first person to estimate national income in the country. Yeah, next question, Andy. The concept of green GDP includes which of the following? Depreciation of capital goods, environmental degradation, inflation rate, tax revenue. Right? So, nice question, Andy. Try to answer this question. What is the question here? Green GDP లో ఏ అంశాన్ని పరిగణలోకి తీసుకుంటారు? Depreciation of capital goods, environmental degradation, inflation rate, tax revenue. What is the answer? Yes. Quick answer ఇవ్వాలి ప్రతి ఒక్కరు కూడా. Yes. Yes, jail cost of method is used for estimation of poverty, not national income. Okay. Yes. Okay, 2 అంటున్నారు. What is 2? Very good, excellent, Andy. Environmental degradation is the right answer. Okay, for example, let's say I am running a timber business. I'm having a timber factory. Okay, or I'm having a wooden manufacturing factory or something like that. Okay, now let us say that using the timber, I am trying to produce something called as a furniture. Now let us say I made a turnover of 50 crores. How much turnover I made? 50 crores. Means I am producing a goods worth 50 crores. But in the process of producing 50 crores, I am cutting down the trees. As I am cutting down the trees, I am causing some loss to the environment. Let us say the total loss to the environment is 5 crores. What is the total loss to environment? 5 crores. Okay. Now, what is the GDP here is nothing but 45 crores. So, I am creating a value worth 50 crores, but I am causing a loss of 5 crores value to the environment. So, actually, the GDP that I am generating is how much? 45 crores. That's called as green GDP. What is that called as? Green GDP. So, you are taking into account the environmental degradation that is being caused. That is what is taken into account. Got it? So answer is nothing but option B is the right answer for this question. Okay. What does net national product factor cost equal to? NNP at factor cost. NNP at factor cost. So here two things. One is the NNP, other one is nothing but factor cost. Two things you have to take into consideration. GDP minus depreciation, NNP minus indirect taxes plus subsidies, GNP minus depreciation, GDP plus the net income from abroad. Which is the right equation? Let me see if you are going to come with the right answer for this question. Yes, every one of you. Quickly, fast. Takes little bit time, but try to think. Okay, two things. Now here we have got NNP, but here you also got NNP. Okay, but here it's saying factor cost. Do you get from here or do you get from here? You have to find out. Okay, see very carefully. NNP at factor cost they are saying. Okay, NNP at factor cost. Okay. Now, if I have to calculate, if I have to convert into market price, how do I get? Now, what is the formula for factor cost? Market price. Market price is equal to factor cost plus indirect taxes minus subsidies. Okay. Now, if I want factor cost, how can I write? I take this both that side. So, market price minus indirect taxes plus subsidies. Yes or no? So, if I want to do NNP at factor cost, I can say that NNP at market price plus indirect taxes minus subsidies. Minus indirect taxes plus subsidies. So, obviously, NNP minus indirect taxes plus subsidies. Option 2 is the right answer. Option 2 is the right answer here. Okay? Very simple. Very simple. Clear? Yeah. Which of the following is not a component of GDP? Which is not considered in GDP? That's the question here. Consumption, investment, imports, government expenditure. జీడిపిలో ఏ అంశాన్ని మనం పరిగణనలోకి తీసుకోలేము అన్నది మన ప్రశ్న. విచ్ ఇస్ నాట్ పార్ట్ ఆఫ్ జీడిపి. కన్సంప్షన్ ఇన్వెస్ట్మెంట్స్ ఇంపోర్ట్స్ గవర్నమెంట్ ఎక్స్పెండిచర్. వాట్ ఇస్ ద ఆన్సర్ ఫర్ దిస్ క్వశ్చన్? ఎస్, వెరీ బ్యూటిఫుల్ క్వశ్చన్. క్విక్లీ ట్రై టు ఆన్సర్. గుడ్ ఈవినింగ్ టీజీ బాలా. ఎస్. Okay, I'm getting multiple answers. 1, D, C. Okay. A, D, C. అన్నీ వస్తున్నాయా? ఓకే, బి రావట్లేదండి. బి కూడా ఇవ్వండి అయిపోద్దిగా. ఎస్ ఆర్ నో? క్విక్లీ. ఎస్, సూపర్. సారీ, సి అంటున్నావా? వెరీ గుడ్. ద రైట్ ఆన్సర్ ఇస్ ఆప్షన్ సి ఇస్ రైట్ ఆన్సర్. ఎందుకు? వై ఇంపోర్ట్స్ ఆర్ నాట్ కన్సిడర్డ్ ఇంటూ జీడిపి? వెరీ సింపుల్ క్వశ్చన్. What is the definition of GDP? The total value of the final goods and services produced within the boundary of a country. That boundary is nothing but economic boundary of a country is called as what? GDP. The total value of the final goods and services produced within the economic boundary of a country. Means you take the boundary of a country, within this country only the goods and services should be produced. The goods and services should be produced within the boundary of the country. Now we are speaking about what? Imports. Imports means what? Something is produced in other country that you are trying to import. Means that is coming from outside. When it's coming from outside, why do you consider? You don't consider that. So you cannot consider imports in a GDP. But can you consider exports in GDP? Yes. Why do you consider export? Because you are producing something here, you are exporting to other country. But where did you produce? You produced within the boundary of the country. So exports can be accounted in GDP, but not imports. Very important. Exports are part of GDP, but imports are not part of GDP. Why? Because exports means what? You have produced inside the country, you are exporting to other country, you are getting money out of it. Imports means something is produced in other country, they are sending it to our country, they are getting money out of it. Got it? So you are not producing within the boundary of the country, so it's not part of the GDP. Very clear. Okay guys, make sense? Does that make sense? Exactly Suresh. Okay, yeah. Imports is the right answer. GDP at constant price is also known as what? GDP at constant prices. Nominal GDP, real GDP, GNP, disposable income. Yes. Try to answer this question quickly. Everyone should comment on the answers. Let it be right or wrong, doesn't matter. Okay, only when you comment, you're going to get the connectivity with the session. You are going to get connected with the subject. Then your interest of knowing that subject will increase. So you should establish that connectivity first. అంతే కదా, మీరు ఫస్ట్ ఎవరితో నన్ను ఫ్రెండ్షిప్ చేయాలంటే ఫస్ట్ వాళ్ళతో మీరు మాట్లాడాలి, వాళ్ళతో మీరు ఒక కనెక్షన్ ఏర్పాటు చేసుకోవాలి, అవునా కదా. కాబట్టి ఫస్ట్ స్టెప్ అది అనమాట. యూ హ్యావ్ టు take part in that. Once you take part, slowly you will develop an interest on the subject. Clear? Yes. Quickly, guys. Nice. Very good. The answer is nothing but real GDP. So here we are speaking about what? Constant prices. We are speaking about what prices? Constant prices. Okay. So you have got two things. One is the GDP at current prices, GDP at constant prices. Okay. When you say GDP at current prices, it's called nominal GDP. When you say GDP at constant prices, it's called as what? Real GDP. It's called as what? Real GDP. Constant price and current price. Now at current price means you're taking today's price. For example, let us say that 2024-25, you're calculating the GDP. Now you see how many goods are produced in 2024-25. You're taking that number of goods and you're multiplying with the price of 2025. Okay, that's the current price. It's called as nominal GDP. Now when you come to constant price, you are taking the production of 2024-25 production, but you're multiplying with the price of what? Base year. Base year ante ఆధారిత సంవత్సరం. సో బేస్ ఇయర్ ప్రైస్తో మల్టిప్లై చేసి నీకు వచ్చిన వాల్యూని మనం ఏమంటాం? రియల్ జీడిపి అని చెప్పేసి ఉన్నాం. సో వాట్ ఇస్ దట్? రియల్ జీడిపి. ఓకే, నామినల్ జీడిపి మీన్స్ కరెంట్ ఇయర్ ప్రైస్, రియల్ జీడిపి మీన్స్ బేస్ ఇయర్ ప్రైస్. ఓకే, whichever you have the base year, you're trying to find the value of today's production with the price of the base year. That's called as what? Real GDP. Okay, disposable income, the income which is at your disposal. Ante entidi? Whatever the income that you earned, from your income you are subtracting the taxes that you have paid to the government, because taxes you cannot spend, you have to give it to the government. Once you give the taxes, whatever is left over is called as disposable income. Disposable income is the income which is left in your hands at your disposal, at your expenditure, whatever you want you can do. You get that income only once you pay the taxes. So for example, you are earning, let's say 20 lakhs. Out of this 20 lakhs, let us say you are paying a taxes of 2 lakhs. Now from 20 lakhs, remove 2 lakhs, remaining 18 lakhs is there. 18 lakhs is your wish, whatever you want you can do. That's called as what? Disposable income. Is it clear? So that's one. And GNP stands for gross national product. Gross national product is nothing but GDP plus or minus NFIA. Whatever is being produced within the boundary of the country, whatever comes from abroad, whatever goes to abroad minus, then whatever you left is nothing but GNP. That refers to the total income earned by the people of the country. So GNP ki GDP ki madhya difference endante, GNP speaks about the people, GDP speaks about the region. That's the difference. Okay, GDP is the better indicator of the development or growth of the economy, not GNP. GDP is a better indicator. Why? Because how many economic activities are happening within the country, you get to know only through GDP. You get to know only through GDP. Because GNP, if it is growing, it can grow even if the income is coming from abroad. So that is not the real test of the growth. The real test of the growth is GDP. That is the reason we compare one country with other countries with GDP. India is the 4th largest economy in the world. First is USA, second is China, third is Germany, fourth is India, fifth is Japan. So you're trying to compare with respect to what? GDP. Okay, very, very important. If you wanted to compare the standard of living of a country, you have to use per capita income. Per capita income is the best indicator of the standard of living of a country. Okay, and the best indicator of the growth of the economy is what? GDP. Clear? So these are the things that you should understand. Make sense? Queen, hi Andy. One more question? Yeah, they repeated. I'm sorry. That's it. Okay. So this is your Narasar, and we'll try to connect back again and again through different classes. Okay. So today we have taken up economy. Based on the requirement, we'll take up different concepts from different subjects. Okay, and come on live whenever we have a session. And I hope you had a great time, and that you can show through your comments or by liking the YouTube channel. Okay, so if you really enjoyed this video, share this link with your friends and do like the video. Bye bye. Take care. Thank you. Signing off. This is your